What are we talking about today?
What is the way forward and what to focus on now?
And woulda, coulda, shoulda.
Wouldas, couldas, and shouldas.
Oh,
yes,
man,
there's lots of
I have
that.
A few.
Lots of that going around.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, the market's in, do you think saying in turmoil is too drastic? Where are we at right now?
A lot of confusion. There's not a lot of clarity on much of anything yet. And this is very similar to last time, 2018. I would go study those charts. And it's going to be different this time. But there's not a lot of you should be doing this for sure sort of things. As far as I understand, they're not even certain on the exports and the fees that are going to be applied right now. Are they going to be today, or the stuff in shipment? Is China going to cancel some of these soybeans that they already have in the books? Nobody really knows anything, and I wouldn't really focus on that. Take the news as it comes at you, and you just really don't try to second guess yourself here. No one really knows the answers. I mean, it'll become clearer every day, and it'll hopefully calm the markets down, which I think yesterday it was that day. A lot of the text and phone calls are we bottoming here? A lot of the calls are, what should I do with my old crop? Stuff like that. And really, I would just go for a walk and relax. Hopefully the weather turns. It was not that good. We missed that big blizzard. We're in the north, and the south has been getting more storms than we have for quite some time. So I'm not too upset about that. But I would focus on more positive things and think about what we should be looking at going forward and what we should focus on to make money or hedge in the future. Just look for the opportunities is what I'm trying to say.
Right. I mean, we all have woulda, coulda, shoulda moments. I think you had one that you wrote down, but we can only trade where it's at today. It pays to look back, right? It pays to look back at what we could have done. What were the spreads telling us? We had talked about that even last week.
Yeah, I love.
It's still, we can't trade yesterday.
No, my favorite game is, what could I have bought to make me a millionaire? So my favorites were the April 470 corn puts. They were $37.50, just sitting down there, $37.50, and they turned into $1,250 very, very quickly. You can play this game all day long, but I enjoy it. I think to myself, boy, that money was just sitting in my account. I could have bought 100 or 200 or 300. But again, I mean, how realistic is that you would actually do that? Not too often does that happen. I did have a client a number of years ago in the 2008 run-up that was very similar to this. Very weak spreads. It was running up on ethanol. It was running up on a low dollar. But the fundamentals were terrible. And he had bought a ton of short-term puts. I believe July. It's so long ago now, I don't remember. Turned a very small amount of money into a very large. So never say never. It can happen, but I just like to do that. It's just like it was just sitting there the other day. They were $37.50, and now they're a lot of money. I bought none. No one bought none. Nobody I know bought any. It's a pretty obscure put anyway. April 470. That's not a common. It's just not a common time frame. And it's who buys way out of the money short term corn puts in February. Not too many people that I know. So, but I do like that game. That is my
kind of play.
Yeah.
That's my kind of play. And you make fun of me all the time. I did not have that.
Yeah.
One.
Where were you on that one?
Well, I mentioned 2 weeks ago on the podcast the soybean 940 in July. I was looking at them, and you said you gave me lots of reasons not to trade them because you don't like those. But
we just fell into the woulda, coulda, and shoulda.
Woulda, coulda, shoulda.
If we just fell into the trap there.
Oh man.
So my whole thing was, let's focus on going forward, because that's what you do if you're successful. Like you missed it. Obviously, I wasn't going to get in those, nor did I. Just like to point out the math. But now, what do you do? So So the old crop stuff, again, I'm in the not panic mode. It is what it is. I mean, what are you going to do? It's already fallen. The question is, should I sell it? Are we going a lot lower? I mean, of course, nobody knows that answer. We're looking for stability, looking for some more information. So we're kind of where we are at Thursday. A little more clarity, I would say. I would say much more, but a little more. And the panic's gone, which is where we started. So this is a break before summer weather. So courage calls are back on the table, and a courage call is a call that you buy when the price is low before summer or anytime really, and then you get a large rally, and then you're able to market your physical grain, and you still have the call on right at the level that you're marketing, is the goal. So let's just say you buy, for instance, let's get some numbers here. September 470 for 22 cents. Then that's where it is now, like a 510 for 10 cents. I'm not sure that's the number, but you get to that number, and then you decide, hey, do I want to take my call premium profit and that corn sale at 510, and then maybe get a grand total of 540? And this is just hypothetical. Or do I want to sell my corn, my physical corn, and then see what the call can do? And so you have this choice to add value to your already sale, or you can just let it ride with the call and you already have your corn sold. So that's what courage calls are. And we haven't really had this set up very well in the last number of years. I think you got to go back a few years ago. Last year was March. You could have got some courage calls, but this is basically a weather play. And then once it gets to the price, the guys that have the call just have the courage to market. That's where it kind of gets its name. It's very easy to market when you have your upside still wide open. The guy that's in the cash market, he might not know what to do. And this is the trap a lot of guys fall into this summer. What do I do now? It's here at this great attractive level, but the forecast looks hot and dry, the old hot and dry into July. And then he tends to hang on, and then it crashes. And this happens more often than not. So the courage calls are a way to get you to market, and then you have the best of both worlds. Now, what's the drawdown of the courage calls would be that we go down further, like for the next 2 weeks. Let's say you buy your calls today, which we're definitely not doing, but you do. It goes down for 2 more weeks, and all of a sudden your call that you bought is a lot cheaper, and you wish you would have waited. So it's kind of an average in sort of deal. If you have multiple calls, and you're going to want a kind of a blended price. And my main issue is which month to pick. This is going to go back to the July story, which I've told hundreds of times over the last few years. In the 2012 drought, I had a lot of July calls in corn, and they expired completely worthless.
Woulda, coulda, shoulda, John?
I shouldn't have. Yeah,
I love it.
No, it went down. It was no good. It was money thrown away. And had I bought September that year, that would actually force you out on the high tick unless you wanted futures. When the options expired, I believe it was within days of the 841 high. I think 840. My math might be a little off. So the September calls were perfect in the drought year, and the July calls were worthless. It literally ended on the low tick in the third week in June there, and then September exploded. And that's just the way that year went. And so I don't know what to do. You have old crop that's supposed to be tight. So, and you're supposed to use obviously the crop year to cover the crop that you have. So if you'd be using July, some people say September is new crop, old crop, depending on the planting window. It's always new crop. I mean, in 2012 would have been the 1 year where it ended, I think, at +2 to December. So even in the most bullish year that we had, ultimately September still only ended 2 cents above December. So from my experience, unless I'm looking at the charts wrong, September, one way or the other, even if it gets 40 cents inverted or more, ends up being in the new crop time frame. So that's the way history's shown. It can change, of course.
Absolutely. I mean, so can everything else, right?
Yes.
But yeah, September definitely seems to be new crop, no matter how you trade it, which is the drawback for getting that time, like you talked about. If you're putting those September options on, you really are trading new crop. Now, that doesn't mean it's not going to go up, but there's a balance there, and it is hard to decide on those months.
Yeah, it tends to be new crop till about midsummer, and then our old crop till midsummer, and then it turns into new crop on the way down. That's usually the way it goes. Also, there's other markets that will be affected by this. Wheat's come down. Obviously, beans have come down. Beans looks like maybe a little longer trade war. But again, that's not predictable at all. Who knows? They could be working on phase 10. We could be already there. They left off with phase 1. It was going really well. And then, elections happen and things change. So are they going to pick up from that? We don't know. But that one looks like that one might be more prolonged. But you have soybean calls. So you look at November soybean calls, and I wanted to get some numbers out there. $11 calls were 28.5 cents. That's pretty cheap for an entire summer of weather and a lot of news. I'm not personally buying, nor do I recommend. I'm just pointing out how cheap. Everybody's so down on soybeans. They tend to be the underdog markets that I like, and soybeans are quite volatile. I mean, really, you get that summer weather going, and no telling where beans can go short term. But these are the things we're starting to track. We're not doing any. I'm definitely not doing anything. I'm going to start discussions with guys. Hey, what do we want to look at for this? And another sleeper market that pops up for me about one in every 7 years is going to be that Minneapolis wheat market. The talk is dry. North Dakota's and Montana and South Dakota are often dry, and this is a very dry cycle. We're here. Snow's gone. There wasn't much snow. Doesn't mean there can't be. I mean, obviously, you're going to monitor that, but that one tends to be a sleeper until it's burning up completely, and then it tends to take off. So these are the markets I like to start to follow this time of year. Again, courage calls are on the table, and we're in for a lot of volatility just with the news. So this should be an exciting year. And the whole focus and where we started is instead of being down and a Debbie Downer, you want to focus on what we need to do moving forward and what's some smarter plays, because you tend to get deals in situations like this if you can time it right.
Yeah, well, timing's always the issue, right? But the focus is that these markets, well, they might suck if in the short term. They do provide opportunity.
Yeah,
so
some guys are on the right side of this thing. They're laughing. I bet
had the ones that were hedged early.
Yeah, the short oil guys, if there's any out there that I don't know any, but boy, I got to hand it to them. Who'd have saw that one coming with the tariffs in Canada? I wouldn't have guessed that. So a lot of unusual moves. The metals don't seem to know what they want to do. Cattle, that's something we should talk about quickly. That's the market that's saying, hey, even on the day where all the destruction was happening, cattle was down $3.54. Then they came roaring back with the idea there's going to be less imports. Hotly debated topic, and it clearly shows you no one knows the numbers very well. The futures were very confused. They're still very confused, but overall it was a very strong market before this happened. Now in their mind, there's going to be less cattle coming in net, be it beef or cattle. And that's the way the market's trading it so far. Now we're carrying a premium to cash in the April contract. I don't know when the last time we had a premium to cash. It's been a long time. It's been right alongside cash. And then the feeder market has just been on complete fire in the sale barn. Now, that doesn't make it right. Doesn't make it the feeders, even though it rhymes, are the leaders. That's exactly what's been going on. But ultimately, the math has to work. You have to get paid on the finished product. And the math doesn't work very good right now. But that's not stopping anybody in the sale barns. As a matter of fact, these tariffs made the bidding angry. I meant they're paying anything right now.
Yeah, well, and that's what I'm hearing from the guys who I know who are buying them locally. They're going to the sale barn every day and they're buying feeders and they don't care.
Yeah, no, it's happening everywhere. It's not every phone call that I get from guys selling cattle or in the sale barn or they're selling their cattle. Same story everywhere. There was just maybe 1 week of slight weakness, and the feeder board's coming up. And but we don't know what the future holds. I would be nervous spending that much money with what's going on. But the cattle market likes what it sees. Surprisingly, even ultimately, if it was bullish, usually when the market's that long and you see some liquidation, you saw a little bit, but boy, they were right back in that thing. Huge question mark on the direction, though. I wish I could help you there. It's about as predictable as the rest of the markets right now.
Right. Well, and it's been that way all year. That's where I do think some of this action now does give, I'm not going to say clarity by any means, but does give you more things to start looking at. You have a few more options to look at across the whole board.
Yeah, and the main problem for hedging in cattle has been the expense to do that, and it's still expensive. It didn't get any cheaper, and options are what I would be using here. There's various degrees of risk there. I mean, you can sell a call, buy a put, fence it off, which nobody that I've known's done that. We've talked about it quite a bit. You have the straight put, which last I look, if you buy some time, is going to be $12, and you take that times 500. That's not cheap. Mm-hmm. So if you're giving away, this has happened in the past in cattle. If you're giving away your entire profit bottom line to protect it, it doesn't make a lot of sense in their mind. Not that it can't go a lot lower. You might want to protect break even, but still, the money's moving pretty slow into protection. It's just very expensive, but a lot of guys are interested, and they are kicking the tires, doing the numbers. And I would imagine I have a lot of phone calls on old crop corn, old crop beans, not so many on the beans as there's going to be on corn, what to do. And then a ton on new crop. New crop corn was like a very big question mark. Now, the good news is the front caved in. The back end didn't come down too much, really, 25 cents compared to the front, which I was in those spreads. That was rough. But the front fell, liquidated, and the back end didn't fall as much. So these are going to be the questions everybody's going to have. And it's going to be a lot of conversations going into plantings for sure.
Definitely. One thing I wanted to talk about today was we talked last week about knowing your markets, and I think that's even more important right now, and not just knowing what market you're in, but knowing what the news can be and what the news is today. So my point being that we know only what we've heard on the news today, but I like to look at the options like what news could come out. Yeah. What's going to be reported, or what is there more positive possibilities to come out, or are there more negative possibilities, or what? Like you talked about the phase 1 or having a phase 10, as you joked about trade deal. What possibilities could come out of that? What does it mean to have to sell all your agricultural products inside the United States? What would cause that? Like, what are those news items that could come out, and weigh that against where the market's at today?
Yeah, and I think that's kind of where we started. It's like, okay, so if we price in a worst case scenario, what happens if things change? And, like with the trade deal, tariffs becoming more clear, and then the weather's the big one for me. If you're going to get a substantial break in front of the summer, generally that's an opportunity to get involved in. How to get involved, and then, is the news going to change? Like you say, do I need to move now, or should I wait? Ever the pessimist I am on the bottom picking, guys are like, is the bottom in? A lot of times what happens is it bottoms, things calm down for a couple days. Everybody puts their stops below the old lows, buys it, bottom picks, and then they like to clear everybody out though. That's their favorite game. Get everybody out, make sure all those stops are cleared out. So I wouldn't be surprised to see another low at all. I mean, it could be the bottom. I know that's not saying anything, but oftentimes the bottom's rough and it's not easy. This might just be a pause before it goes down a lot more, but this is where you start tracking this stuff and getting to know your markets, and then hoping the news change, which I'm sure it is. And to think that we're not going to have any weather problems the entire time, 1 out of 10 years, I mean, I don't have the numbers on that. It's not very often. 2014 jumps out at me, or 13, where from day one, it went good for plantings and for the growing season. So it does happen, but it's not that common. So we're looking for the opportunities. We want to know, is it worth covering old crop? I think after a break like it is, and then the new crop. So there's a lot to do in this little window, and the markets will change, like you say. And we might have a completely different podcast next week that is very different, and we're talking about how fast it's going up. You just don't know in this environment.
Exactly. Yeah, and if we did, we would be sitting in our offices, not sharing it with anyone.
Yeah, I should be looking for $37.50 calls right now, because then I can buy them and tell the story for real. That would be my favorite thing to do. It gets to be hard to buy $37.50 calls. They're so optimistic on the way up. You remember last year, I think $9 corn calls, somebody bought some for like 3 or 4 cents. So it's hard to get $37.50 corn calls for summer weather, but I'll be looking for them.
Absolutely. No, and I do remember that trade, and it was like 200 of them, $9 corn calls. They had to have been covering something else.
One very optimistic guy and one guy probably laughing at the free lunch they gave him.
Right.
Well, in hindsight, it was free lunch, but that's what makes a market. One guy thinks it can make it to 9 for some reason. The other guy's more than happy to sell that price.
Yeah. I mean, you still are picking up pennies in front of a steamroller. There's our quote for the day.
Yeah, Twitter, I noticed that there's many options, easy options selling, safe options selling. You see that, and that I would run really fast when you start seeing the safe and options. Only if you're on the long side can you say that. I don't think you can ever say that in the short side. I mean, somebody sold those $37.50 puts thinking like this is free money, and it didn't turn out that way at all.
Right. Yeah.
As a matter of fact, with my clients, I make it. I try to teach them. Let's say you sell a bean call for 50 cents in front of summer. This is maybe whatever. Not this year, and over time it erodes down to maybe 6 cents. But there's still a lot of summer weather left. Oftentimes, you want to get out when there's not that much premium or 1 or 2 pennies. I have a lot of working orders on sold puts and calls for 1 or 2 pennies. So if you're selling something for 40 cents, go in with the idea that you're only looking for 35, because getting out with that when it's not worth very much. I've seen some really worthless options turn into short options, turned into very expensive options to keep around. You might get another $100 if it expires worthless. It looks almost impossible for it to get to that level. That's a nice steak dinner. Actually, it's not even a nice steak dinner anymore. It's like half a steak dinner. But in your mind, you're like, that's easy money. That 100 is never going to. The beans have a way and wheat, really, and now corn. You can throw that of changing your attitude really quickly. So always be aware of what premiums you have left if you have sold, because it can come back and haunt you very quickly, even in little short time frames. As a matter of fact, before this fall, there was a lot of shifting around here in various accounts where we were moving some stuff around, taking off some like really low premium options. And I'm doing that for calls right now for a couple of guys that I'm talking to. Some of the calls that were sold, it doesn't look like it's getting up to $5 or $5.10 anytime soon. But hey, if they're only worth a couple cents, let's get out of them. At least have these conversations. You don't have to listen to me, but have these conversations. Talk to your advisor or your broker or me, and make sure you're following that premium. This is actually a whole nother episode. That's one of the biggest mistakes guys make, is sticking around short options too long. But it's also sold to everybody as this is easy money. And boy, selling options is never easy money. You're always sweating every day. You're just looking for that big news story to go against you, and bad things can happen.
Absolutely. And on that same thing, if you really do want to sell, take that profit and you can look at what's my next thing I should look at.
Yeah, or ratchet way higher.
You don't have to take it way out.
Yeah, you could. Yeah, just take it, get on the sidelines, or look. Some guys go lower and get more premium if it's really on the run to. Let's say you sell calls and it's on the downside, but you keep pressing your luck selling options, and there's a lot of bad stories out there, and guys do it all the time. I'm not saying don't do it. It's a strategy that's put out there quite a bit, and this is a perfect market to show anything's capable of anything. I'm sure those $50 oil puts looked impossible to get to here. Now that looks like a realistic possibility. Things change very quickly in the commodity markets, and this news and these tariffs and all the stuff's going on right now, that's really going to make option selling very difficult. The premiums probably will go up, but you also have a lot more risk.
Yeah, absolutely. Well, thanks, John. Any last words, or leave your phone number here?
218-731-1578.
Thanks, John.
Yep.
What's on today's show, John?
What the?
Oh,
What's going on here? All right.
we just got our outro.